when I spent a lot of time with Alibaba, Alipay,
Yeah.
looking at why they've become so successful in China. What I realized was they throw away their systems every 3 or 4 years and refresh them.
Hello, I'm your host, Effie Vilarino, and today I have a finfluencer with us who needs no introduction, Chris Skinner. Welcome, Chris.
Good day. How are you?
I'm very good. It was rainy here in Zurich. Today, it's a wonderful, bright day. Maybe the impact is from you.
Well,
Where are
I'm
you?
sitting in a hotel on a golf course near Cape Town, South Africa, and just watching all the guys playing golf and messing up their shots, which has amused me. They're probably bankers. Anyway,
Okay. Did you see what wearables they're wearing? Are they wearing Apple Watches, more advanced? Does the tournament have something special? Any NFTs, anything like that?
no, I can't see that closely. But having said that, it's an amazing day here today because South Africa is going to the election right now. So it'll be interesting to see if the ANC wins again. Everyone tells me they will, but we shall see. So that sets the date in terms of, yep, we're talking in the middle of, well, so the end of May. And I'm
So
in South Africa during elections and watching golf.
great, great. I mean, this is a year that a big part of our world is going through elections in terms of percentage of populations, right? And this is affecting everything, definitely policies. We care about policies in innovation. But,
Mm.
today I wanted to talk with you about your new book. And before we do that, I want to ask you, how many books are you counting right now in finance and children's books?
Yeah, I mean, I should probably say, just back to the point on elections, that when we talk about the future, which I do all the time, you do, as evidenced by your book, basically the political and economic uncertainties are very great right now, whether it's here in South Africa or UK or USA or wherever. So it's an interesting year from that perspective. From the perspective of where I focus, it's rather than political and economic, it's social and technological. And so 18 business books, 5 children's books later, here we are. And the business books always focus on finance technology in the future. And the children's books are Captain Cake and the Candy Crew, which is Lieutenant Chocolate, Sergeant Jelly, and Private Potato, flying where no sweet has gone before.
Excellent. So I guess there's no overlap between the children's book and the finance digital
But
books.
in some ways, maybe, in that the publisher told me when they commissioned the books, the children's books, that they love the idea, the diversity, teamwork, and inclusion themes in the books. So maybe those are good themes for business as well.
Yeah, yeah. I mean, when I look at your books and I imagine that it's not intentional, your fintech books, they all have digital in their title, the main theme, and so on. And now your new book doesn't have digital. Instead, it has intelligent. So that to me is a signal. I don't know if it was intentional or not, or conscious or not, but we're moving from digital to intelligent. And I wanted your comments, your thoughts on that. And also, obviously you didn't write the book, a month ago or 2 months ago. When you wrote the book, were you under the influence, so to speak, of chat GPT and all these large language models and the generative AI boom?
Yes. I mean, when I started the book, the original title, probably in my head, was Digital Money, to continue the digital theme. And it was mainly around the friction between centralized and decentralized financial exchange, which you know is easily summarized as the friction between cryptocurrencies and central bank currencies, which are now central bank digital currencies. So digital money, digital currencies would have been the obvious title. But in the middle of all of that, after, oh, well, some people say 30 years, I would say over half a century, artificial intelligence has finally come into mainstream use with ChatGPT from OpenAI, bought by Microsoft, and then Gemini from Google and other AI services started to expand very quickly into our universe. And so, as I thought about digital, decentralized, democratized financial systems that integrate artificial intelligence, that became the theme of the book. And it took it to a different space. And it kind of says, we have finally got to the point that we can have infomediaries, as in the network manages money on our behalf, so we don't have to think about our money, because the subtitle of the book is When Money Thinks for You, rather than having to have intermediaries, which is the traditional financial structures. Big debate there.
Yeah, I'm sure. So can we imagine this line of thinking as each of us has an AI agent that is acting on our behalf or, in our interest, and that AI agent is interacting with an AI agent from the service provider, whatever that is, for our mortgages, for whatever, our planning, for retirement, our investments, all that. So it's those two agents that are dealing.
Yeah, I mean, I guess where I'm thinking where we're going is we'll soon be able to just put on a pair of glasses. In fact, I've got a pair here. So let's say that these are connected to the network. And in the glasses, I can see everything that is being transacted and traded on my behalf via my intelligent intermediary. And the only time I actually need to know about it is if there's an issue, which is maybe I have too much exposure, too much risk, or likely to get into debt and require more credit. So we kind of delegate everything to the network. And there's two parts to that. We delegate our risk portfolio to the network, but equally the network of the people determine the way in which the transactions are traded. And so there's two pieces there, because the second one is more around the cryptocurrency themes, which is we have moved already to democratized, decentralized network for those who get it. But for the average person, they don't get it. But for the average person, many of them want it and they don't know the risks. And so the intelligence will inform them much better around, if you go down this route, are you aware you could lose everything? And if you're not accepting that risk, then put some caps and limits in through my intelligence. But we wouldn't have to do that through a keyboard. We'll just have a conversation.
Yes, but that's at the experience level. So
Yeah,
you're imagining a world where everything is voice activated rather than
totally.
activated.
You probably saw the launch of Omni from ChatGPT, which they stole Scarlett Johansson's voice, which is a very bad thing to do. She's not happy. But that whole thing around emotional intelligence in the network is now also emerging. It's moving very quickly into this fast future blur.
Yeah.
I wonder why I said that.
Yeah, the fast future blur, because we've become familiar with all sorts of blurs, right? Industry blurs, our industry, financial services, is blurring with travel industries, with leisure industries, with e-commerce industries, and so on. And the lines between physical and virtual are blurring. But there's much more blurring potential out there. And there are, of course, risks, but there are great opportunities for for those that want to lead and imagine the future. And one of the blurs that I'm passionate about and talk about in the book is this concept of what it means to be an AI native business. I mean, you've written half a dozen books on what it means to be a digital native business, right? It's taken years and we're still not done, right? There's still a lot of businesses, especially in financial services, that don't understand that just using digital tools of sorts doesn't make them a digital native business, right? So what does it mean to be an AI native business? We don't have any examples yet, but I do think that we will be soon seeing them. And why do you agree that we don't have AI native businesses, or do I need to go a bit deeper? What do you think? How do you hear this concept?
Well, obviously, the AI native businesses are emerging in terms of the ones we've already mentioned, which are now Microsoft, Google owned and developing, but there are others. It's not just that. But what I think is interesting is to be a digital native business, you have to be born on the internet, and your business model has to be network based from day one. And that's been a huge struggle for the analog businesses from the last century to transform to do that. And many of them are on the sort of journey of getting there. And I think AI native is just an additional piece rather than something you have to reimagine and restart. I think you do have to obviously think about your strategy in a different way, but it's a evolution of digital native rather than a revolution. And the reason I say that is that if you've done the digital transformation right, then you will have data at the core of the business, and you will be a data-driven business. And all that AI adds to that is leveraging the intelligence of the data that you've got coordinated and rationalized across the business structure by being digital at the core and data-driven. So it's still a huge challenge for any traditional analog business because they haven't got through the digital transformation yet.
Yeah.
And I often say, how can you be artificially intelligent if your data is dumb? And that's the problem.
Yeah.
For the old business.
Yeah, the data architecture. My point of view is clearly I agree with you that those that are digitally native have a huge advantage to embark on the journey of becoming AI native compared to those that are laggards. But it's going to be a challenge, I think, for digital native businesses. They're not all going to be able to make this journey. A lot of them, I think, are going to stay on the surface, deploying these tools, maybe at the customer level and not really going deeply. They'll probably go to helping customers discover products with AI. Maybe they will use to design customer experiences. But then at the enterprise level or the ecosystem level, it's going to be difficult or challenging, and it will require a lot of transformation to integrate AI. For example, how many companies are using AI for innovation purposes? How many companies are using AI for strategic decision making? These processes currently, even in digitally native companies that definitely have increased feedback loops with data, they're still not at that complexity level, but being able to deal with the complexity of a business with the help of AI. I envision that AI will enable businesses to deal with the complexity of a business. And we can break it up in different areas, customer, enterprise, the ecosystem and so on, just to help us understand. But it's a complex business. And unless we get to the point where we're using AI to deal with this complexity and not once a year look at our strategic decisions with the KPIs we get from the digital tools and the feedback loops, we're not there. We need to get to a point where it's kind of continuous in terms of our ability to deal with the complexity of the business.
I mean, the points you're making, I also agree with, because I always say that the digital transformation journey is a journey without a destination. It's a continuum. It's continually transforming, and technology changes every day. But when we talk about AI today, it's not something that suddenly hit us. We've had chatbots and avatars and stuff in the past, neural networking, paired trading, which have led to this point. And this is not the point where it finishes. It's a continuum, and it develops further and further and further. And where it goes is, no one knows. It's basically, how do we keep up with change? Because change is the only constant.
Correct.
And I think the biggest issue is in the context of change for a traditional institution, whether it be a retailer, an airline, or a bank, it doesn't matter. About 2/3 of their technology structures are limited by heritage because it's a legacy that you have to try and adapt rather than recreate. And that's a huge issue. But even with the new companies, the new digital companies, the FinTech community, for example, they have legacy, because they've been around for a decade or more. And so a lot of their code also needs to be reimagined. But I would say for a born on the internet digital company, their refreshment rate or legacy is only 1/3 compared to 2/3 in a traditional company. And one of the most interesting case studies I've done on this was when I spent a lot of time with Alibaba, Alipay, looking at why they've become so successful in China. And I always remember meeting the head of their systems architecture, who was ex-Microsoft in California and come back to China to head up their fourth generation reimagining of their systems, and being shocked by the fact that he was telling me about the fourth generation and talked me through the first, second, and third, and fourth, and the reason why they were doing it. The fourth was actually mainly around fraud and using artificial intelligence to monitor transactions and risk. Bearing in mind at that point they were doing 250,000 transactions a second at peak performance. Then the fifth generation architecture, and they're processing over 500,000 transactions per second. Then the sixth generation, they're processing 1 million transactions a second with 2 billion users. And what I realized in that conversation was they throw away their systems every 3 or 4 years and refresh them. And I make that point specifically to all the banking people that I know, because when I say it, I see their faces and they're going, geez, we're still using COBOL from 1970s. 43% of US banks run their core systems on COBOL mainframes. There's nothing wrong with COBOL. There's nothing wrong with mainframes, except I don't think it's fit for the 2020s plus.
And most of their projects take maybe 18 months in the best case, right?
Exactly.
When I hear you, I'm thinking if we take a grown-up FinTech, a 10-year-old or 15-year-old by now that is pretty successful, when will they be using AI, for example, to re-engineer their APIs?
I think some are in that they're not sitting behind the 8 ball. They're trying to keep up and be ahead. And an example, for example, is Bunk, which is a Dutch bank that says they're the first generative finance bank. I wouldn't quite necessarily endorse that, but I like the fact they're saying it because they're obviously trying to stay ahead of the curve. And I guess the question is really, what does AI mean in retail, commercial, and investment banking? What does it deliver as a benefit to the client? And the key thing is that it gives the client a lot more knowledge and depth about transactions. And I'll give you an illustration, which is 2 things I hate about traditional banks as a retail customer or small business customer. One is truncated transaction lines, which tell me I've just been paid by ABC in
Yeah,
this amount, and I've got no idea who ABC is because they've truncated the names and the details. But AI in that case would give me all the information about who and where everything is
the
coming from and why,
context, more context.
much more context. And then second thing is, and I made this point many times, is that if you look at the digital challenger banks, they are using alerts very effectively to tell me about things happening on my account. So I
Yeah,
don't have to open the app.
yeah.
Whereas traditional banks haven't got that. So I have to open the account to find out what's going on. And they think that's great because that means I'm a big digital bank app customer user because I open the account, every day. And the only reason I open it is because I don't know what's going on because they don't alert me.
Yes, yes.
So I think as AI gets into those areas in far more depth, and if you expand that into commercial and investment banking around risk and portfolio management and netting and FX and treasury and pooling, we're going to see some massive changes.
Chris,
But
I was going to say that because you're talking about the customer, whether it's you and I as a retail customer or a small business or a larger business, I'm thinking for how the financial provider, be it Bunk or a traditional bank, how are they managing their business, their risk management processes, be it
mhm,
around fraud, but beyond fraud, because fraud in payments or verification and so on is just one aspect that needs to be managed. There's so many others, right? So we are very early, and unless we see them really using these advanced AI tools to manage that part of the business that is managed in a very batch processing way, and nobody
mhm.
has the holistic picture. I'm talking internally for their risk management purposes. Then we are not there yet. It's really very early. I feel that we're just on the customer
Yeah.
facing front, and fraud is an example that, yes, it's already a use case. And Bunk, as you said, I think is priding themselves, from what I understand, for using advanced AI tools for their fraud.
But as I mentioned earlier, that this has evolved over decades, and it's not just suddenly hit the street, although a lot of people feel that way. And most banks have actually been experimenting with artificial intelligence in risk, fraud, compliance, and regulation areas for many years. They haven't applied it so much to the customer experience. But by way of example, there's a great headline in 2017 on Bloomberg, which was JP Morgan Chase using artificial intelligence to scan and look at the regulatory compliance of commercial contracts. And that the AI engine could do the scanning and approval of commercial contracts in 1 second that previously took 360,000 human hours of legal analysis. So, that's 1,500 lawyers that you can get rid of just overnight using this technology. And I also remember around the same time talking about UBS, who were applying similar ideas using artificial intelligence to take high net worth customer requests and automatically implement them in a few seconds that previously took 45 minutes of admin for a wealth manager. And the natural question then is, what's the point of the humans? Because if we're getting rid of the lawyers and the wealth managers aren't needed to do the admin of high net worth client requests, and equally, John Crane, who used to be the former CEO of Deutsche Bank, said that most of our employees are just box tickers and button pushers doing accounts, and we can automate all of that. Where are we going? And the answer is we're going to a place where the wealth managers are far more informed and augmented by technology, not replaced. They have far more dedication to give high net worth clients better service. We get to a point where lawyers are doing meaningful jobs rather than just ticking boxes, and the same with the accountants. And we end up with a world where artificial intelligence doesn't replace everybody, it actually augments everybody. And that's where I'm very optimistic. And I see so many people who are negative about this technology, getting rid of jobs. I don't think it will get rid of jobs. I think it will augment jobs.
So it's really moving towards this intelligence, moving to augmenting. I mean, I think a great example that comes to mind is if you have somebody working in loans, they have a very sort of narrow understanding of the customer and of the whole business. Whereas with these advancements, their knowledge can be broadened and augmented and being able to serve the
And
customer much better.
and maybe I'm being simplistic, but I show my age, and if you know what I'm talking about, you're showing your age.
Yeah.
I remember using slide rulers and logarithmic tables in school when I was growing up, going way back when, and having a huge argument in the school about calculators, which was
Yes.
a new technology that could automatically do
Yeah.
what used to be done by those old tools. This is just the same thing in my view. It's going from old tools to new tools, and the
Yeah.
new tools don't replace everything. They make everything just a lot easier.
Yeah. Yeah. Grandpa tools to modern tools, right? And ironically, it will put more value to the relationship, especially when we look at wealth management and those areas.
Hmm.
Will not stay clearly are not going to be privy to the high net worth individuals. You and I and anybody will be able to have their personal advisor if you want, but the people that are really the contact will be really augmented and their relationship will be valued. I hope we come to a point in finance that we're not where there isn't this disconnect between price and value. We stop shopping for, lower cost stuff, right? What I mean,
Hmm.
we used to have to pay 4.95 for a trade at Charles Schwab, and now it's zero. But has that added a lot of value to our financial life? I don't think so. It hasn't improved the financial planning and the financial lives of anybody. Yes, we can argue that these fees eat into the returns, but it's not improving our financial lives, really. Our ability to buy a home, to get our kids to school, our earning ability. When will finance really look into what we all want? We want to earn more, we want to invest better, we want to plan with the uncertainty better. That is what financial services should give us. Can AI really move us to that level? Because we've moved from the level of opening up access, especially in the developed world. We need better quality, not more
Yeah.
quantity and faster and cheaper.
Well, I think the price value equation is quite interesting in that that's where a lot of fintechs are making great gains because they're reducing cost and therefore increasing value. But they're doing that with being a new entity. And one of the things I keep coming back to is a theme at the moment is around trust and the idea that if you use an awful lot of new entities and you trust them, are they actually regulated? Are they actually trustworthy? And I'm not casting any aspersions on any companies, but with the FTX implosion last year with Sam Bankman-Fried, who everyone calls Freed, but he's not freed, he's fried, he's in jail. You know, and the other things that have gone on in the crypto world, I kind of go, yes, we can democratize and decentralize financial services, but we cannot do that without structure and governance. And I've always been hated by libertarians because I've said, you know, if you don't have money with government, then you have a Wild West, which is what a lot of crypto is. And the reason I mention this is that when you talk about price value, the reason why crypto was popular is first of all, it meant you didn't need a government involvement in what you're doing. But the second is it was instant, global, and free. And it is instant, global, and free to use crypto to pay for something. But the challenge comes when the payment doesn't go through the transaction doesn't happen. And my illustration going back to that is what happens if you don't get the right answer from your search? What's Google's telephone number? You know,
Yeah,
and transactionally, the same is true. So I think the price value equation is a very critical discussion. But that's where most of the new visionary tech players are attacking against the old players. And the battle is not finished. It's an ongoing journey going back to digital transformation as a journey. And some really do it well. Probably my poster child would be Amazon and Alibaba. Some are not doing very well. And I won't mention names again, but they're the analog companies.
yeah, yeah. You mentioned the FTX Trojan. I imagine you agree that it really has nothing to do with crypto. It was a very traditional organizational structure and
Mhm.
a traditional business. It was just an exchange. And all that was going on was a convoluted stack of entities that should have never been allowed to happen. Why did it happen? We know the story.
There are, but I think a couple of key points, Effie, come out of what happened with FTX and with previous things like Mt. Gox 10 years before, is that people thinking that cryptocurrency therefore is dodgy are completely misunderstanding the point. It's like saying that Bernie Madoff means that the
Yep.
US dollar is dodgy. Well, it's not. It was Bernie Madoff who was dodgy. It's Sam
Yeah,
Bankman-Fried who was dodgy. And from my side, I think crypto is still very interesting. It will continue to develop and grow, in my view. And the biggest concern is the regulatory structures that go around it, because
yeah,
crypto doesn't recognize governments, central banks, and borders. It's a global network of the people. And
yeah,
this is what the friction, I think, in everything that's happening during our lifetime, which is the network of the people, thanks to the technologies that we developed, are starting to run our world rather than the national governments.
yeah.
And national governments are that difficult.
I was very curious about these issues, so I decided to go and attend one of the network state conferences by Balaji in Amsterdam. And I did that last year, and it was very interesting because you see there how you can take the idea of the blockchain, the distributed peer-to-peer network, and take it to another level where you're creating communities that are organized based on these principles. You combine the mindset of entrepreneurs to create all sorts of different innovations. I mean, we know how other peer-to-peer concepts have evolved from crowdfunding with DAOs for investing, but the experimentation continues. And I
Mhm.
think that people don't understand or don't appreciate the impact on our thinking that Bitcoin, blockchain, and the crypto world has had and continues to have, and how combined with AI, it will evolve our thinking. And our thinking obviously is what leads to actions and breakthrough innovations. It
Yeah.
might not be the hot area right now, but I think it's this combination of these two principles that are driving where we are going.
So if we were looking, 10 years forward plus, then that's where I spend most of my time thinking about the world of technology and finance. I, it's going to be very interesting how it develops. And by way of example, and I just blogged about this today, I was having a debate with some card experts. And as soon as I say card, I'm already thinking that's last century technology. It's chip in this century. I did say some years ago, MasterCard should be called Master Chip, change your brand. But we were debating the four pillar model of the card schemes, which is, issuer, acquirer, merchant, customer, and whether that would still exist in 10 years. Now, my contention is that that could move to a two pillar model, merchant, customer, direct. Now, you don't need an intermediary. They contended that you will need an intermediary, but will it be one or two? So will it be a three or four pillar model? As in, you could do things with digital money that you could never do before. You can do things with CBDCs you could never do before. But there's debate amongst central banks and banks around are digital currencies from the central bank offered direct to corporates and citizens or through intermediaries. And I think the whole debate, and in fact, I've had this debate pretty much my whole life, is disintermediation versus intermediation. You know, do you really need these institutions that have been around for centuries in the middle? And my conclusion from having debate for so many years is yes, you do need them for cross-border trade, for managing risk, and for trust, because there's a strong link between governments and financial institutions and stable economies. And if you break that link, I kind of wonder what happens.
Yeah, yeah.
What would your view be? In 10 years, do you think we could democratize, decentralize everything and governments and banks are no longer needed?
I don't think so. And I'm also my kids are in their early 20s. So I get some sense of that generation. It's very interesting. I see from them that they are not allergic to delegating to an authority what needs to be done, especially their financial planning and lives. I don't see that adversity. I see more adversity in another generation of sort of an age between, let's say, 40 and 60. I think there's more adversity there. So that's one fact. And the other fact is, I strongly believe that because of the geopolitics, because of the increased political aspect of money, we will stick with these authorized entities because we want to trust something. We don't feel safe. If we felt safer as individuals, we would be more open to peer-to-peer networks and more disintermediation. We don't feel safe. The fact that we have increased uncertainty due to the macro environment and the geopolitics, deep down makes us feel that we do need those authorities. And even though we might vote against, deep down, if they put the gun to our head, we would say, no, we want to keep them. That's what I think.
Yeah, and I would agree with you. It goes back to what's Google's telephone number.
Yes.
Who knows? You could probably Google it and find the main head office, but not customer service reps. And a lot of the things that are happening, particularly in the crypto area, there's no one you can call to sort things out if it goes wrong. And this is actually a discussion I'm having right now around electronic money institutions or e-money institutions, EMIs, versus banks, because Revolut's been struggling to get a UK banking license. Why do they need one? And then the answer is because they want to do lending.
Of course.
And
That's the only
do,
way to profitability, Chris, isn't it?
yeah. And their problem is if you're an EMI, you have to safeguard customer funds, which means you have to keep funds on deposit ready for any issues. And all that money is, and according to a report from Clearbank, this is 35 billion euros in 2022 of funds amongst EMIs that are being used for safeguarding that could be used in a much more positive growth way to get better return on investment through lending. So this whole thing around banking, it's not just trust, but it's actually progress, investment, credit, mortgages, trade finance, etc., which if you have so many payment institutions that are just holding those funds back for safeguarding, seems pretty ridiculous.
Yes, yes, because we have to look at the big picture. I mean, financial services are there to support economic activity. That thing will never change. And it will
Exactly.
always be core, right? And if you look at the aggregate, if the money are kept in a vault doing nothing, then, we haven't improved the situation. And I like to look, I used to look, when back in, what was it, 2015, 2016, when I started focusing on fintech. It was the robo-advisory, era, Betterment and Wealthfront, and, the autonomous money that Wealthfront was aiming for. And I was looking at some numbers in the US of the cash that is what I would call unadvised, meaning they're just sitting in a checking account. They're lent because they're at banks. But if you look at whether all these robos have reduced the amount of cash sitting in checking accounts or, idle, not invested, uninvested, they haven't made a big impact in the developed world.
Mm.
Which is it's remarkable. It's just remarkable. Have they been able to make a positive impact and move more people to invest? Or have they just moved you and me from a traditional broker, a traditional provider, to them because it's more efficient, because we can do more things? We go on eToro, we become more do-it-yourselves or whatever. So we need to look at these metrics too, that are comparable to what you spoke about with the EMIs.
Mm. I mean, it's interesting again at FE because 10 years ago we were all talking about robo-advisory, PFM,
Yes.
and all the things that were emerging. I don't hear people talking about these things much anymore, crowdfunding and such like. And maybe it's because it's now just become part of the system. Or I think more importantly, everyone is always going, well, what's next? So been there, done that, what's next? I think all the examples we used from that last decade are companies that are actually flourishing. I mean, eToro for me is a hugely successful example of changing the game. And if we're looking forward to what's next, we could talk about more AI stuff, quantum computing, the metaverse, 6G, whatever. But actually, what's next is it's just constant development with technology on this digital continuum, which is a journey that has no destination. It's just taking us to sort of the future.
I mean, we could talk many hours. We need to,
Yes, we could.
wrap up our conversation. I would say that we are moving from the experience economy to a more intelligent economy. It's on the spectrum, whether we talk about digital or traditional AI versus advanced AI, machine learning, generative AI, and so on. And financial services, the constant for me is they are behind every economic activity. They are enablers, they are core. Payments is the obvious one, but everything else is too. Capital markets, allocation of capital, management of capital, financial planning for individuals. It's all behind core economies and economic activity, and this will never change. Who will be the providers? Who will be the intermediaries? That's what we're looking to understand, how much that will change. On the other spectrum of absolute centralization, tons of intermediaries versus, DAOs and that other extreme. What about you, Chris? What would you like to leave us with? Your wisdom?
Yeah, I guess I'll leave you with the core of everything in financial services is trust. And the fact is, I'm not sure that the regulators are keeping up with it, but they're trying very hard. The European Union's new Artificial Intelligence Act is interesting because it seems to be more around high risk, but in a government context using biometrics, for example, to track people, rather than high risk, as in when you've got a deep fake scam on a financial account that's fooled someone to send millions to who they thought was the CEO on a Zoom call, and it wasn't. I think that whole area is going to become really interesting around trust and exposure and risk. and technology is creating great ways to improve, cost cutting. I'm not sure that we've got to the stage yet where regulators or financial institutions understand what that means in customer experience and risk management. And I think those areas will become the highest priority areas over the next decade, which is how can we use intelligent money to improve the customer experience and reduce risk. And the AI profile in that space, whether it be in corporate, commercial, investment, private banking, or retail, is going to be the biggest area of developments for the next decade.
I'm personally more excited to see how this can change capital markets, the allocation of capital, because these are huge markets and hugely important. Their ripple effects are beyond our comprehension, so to speak.
Well, it is interesting in capital markets, and that digital asset management has now become one of the big topics, and it never used to be. It used to be about physical asset management. So,
Yeah.
Changing very quickly.
Thank you, Chris. Thank you very much for this wonderful discussion.
Thank you for having me.